Good afternoon. Welcome to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me back at MarketSite is Tony Zhang. He's the Chief Strategist over at OptionsPlay, and we're going to talk about how to trade the NQX, new product launched by the Nasdaq options team. Tony, as always, thank you for joining me at MarketSite. Give us a quick rundown on what NQX is.
So NQX is the new reduced value index option on the Nasdaq 100 that was just launched this week. Just like the Nasdaq 100, it is cash settled European style options, except that this one is going to be exactly 1/5 the value of the full Nasdaq 100 NDX options. One of the great things about this product is that it's all going to be PM settled, which is going to be a little easier to manage around expiration Fridays. If you look at the Nasdaq 100 index, it ran from about 2,000 to 7,000 over the last decade. So the notional value of these contracts, or the full contracts, are quite large. They're $700,000 a contract. So it's out of the reach for some retail traders. So this new index creates a new opportunity for traders to be able to trade, get exposure to the Nasdaq 100 index with a smaller notional value. And the great thing about this is that for traders that are currently trading the Q's ETF options, it gives them another option to potentially trade or get exposure to this with better tax treatment, because the broad-based index options give you 60% of your capital gains is short-term and 40% is long-term. So it's an interesting product for retail and institutional traders who are looking for a bit more flexibility with their contract sizing. And
NQX can be traded for hedging and speculation just like any other options contract.
Yeah, exactly. So those are the two primary use cases that we see with these types of options. Speculation, for the most part, is where most of the volume is, very popular amongst technical traders, either if you have a strong directional view or even just a modest neutral view on the underlying stocks. A lot of technical traders will use this to trade credit spreads and debit spreads. And on the hedging side, it's really more so for the long-term buyer, long-term investors, if you will, to be able to stay invested in the equities that they're currently holding, but still protect themselves against a correction to the downside.
Well, you're talking about technical analysis as it relates to underlyings. Do you also use technical analysis on the index itself?
Absolutely. So one of the primary use cases of NDX and NQX that we see is actually trading credit spreads. So this is traditionally what you would see with technical analysts that like to use the oscillators like RSI, MACD, stochastics. These types of indicators give you a reading of overbought and oversold. So tech traders, what they'll typically do is they'll sell a put credit spread when they feel the markets are oversold or a bottom, and they'll sell a call credit spread when they feel the markets are overbought or a top. And they can essentially string these calls and puts together. And what's interesting with these types of strategies is we're seeing prints in very short dated options when people are selling credit spreads. They're usually going only 1 to 2 weeks out from expiration, and they're selling relatively far out of the money calls and puts. So roughly 10 to 15 deltas is where they're selling, and then they'll buy back a 2 or 5 delta a call or put to kind of help cap their risk. That allows them to take a loose directional view with relatively limited risk. And then on the other side, for the speculators that have a strong directional view, so a lot of times you have chartists that are looking for breakouts or breakdowns, they'll typically trade something like a 1 to 2 month option where they'll buy a near the money call or a put. It gives them exposure to a directional move, and then they'll typically sell maybe a 15 delta call or put against that to kind of offset the cost of that long call.
All right, well, it's be interesting to see how these are going to trade.
Absolutely.
All right, well, thank you as always for joining me at MarketSite, and thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.